The retirement accounts in the UK where you have control of the money, but you can only invest the money in a compliant equity that the retirement account lets you invest in. So there's lots of that, 401ks, IRAs, retirement accounts. They've got them all over the place. They've got them in Australia. They've got them in Japan. They've got them in the UK. And we're creating these instruments, whether they're equity or they're credit, to tap into those pools of capital. And it seems inevitable that passive capital will definitely drive this movement. The one thing that's worthwhile to note about Bitcoin treasury companies that's not true of other equities is Bitcoin treasury companies are pure energy creatures. We're absorbing capital every single day in the market. So if you're looking at my enterprise value, it's like tipping to 140 billion right now. The enterprise value of the company is 1.2 billion 4.5, 5 years ago. So if you were a passive investor, you might have had 1 billion of it. But of course, as we get 100x bigger, you're buying 100x more, and we're qualifying for a lot more indexes. And as we get indexed, that means that, when there are passive flows, and there are always passive flows, on the margin, there's always going to be more euros and more dollars flowing into passive capital markets funds. That's going to flow into the Bitcoin treasury companies and the index. And when that flows, it's going to drive their premium. And when the premium expands, then they can simply issue the equity, buy the Bitcoin, expand their equity market cap, expand their weighting in the indexes, rinse and repeat. And so BTC companies are positively polarized to the capital. They're magnetically attracting it. And I can't help but be amused by the fact that every major successful bank is upping their dividend and they're upping their buybacks. So they're surrendering capital to decrease their equity market cap. And then every well-run tech company is buying back their stock and issuing dividends to decrease their weighting in the indexes. So every well-run company running a traditional corporate finance playbook is surrendering capital as rapidly as they can. In fact, the more successful they are, the faster they surrender the capital, and the more they diminish their weighting in the passive funds. And then every BTC company is attracting capital, increasing their weighting in these funds, and thereby increasing their credit and equity premiums to the underlying assets, which is beneficial to all their investors. So there's a very positive cycle going on for Bitcoin treasury companies, and there's a very negative capital cycle going on for companies capitalized on traditional credit instruments.
Absolutely. If a Mag 7 tech stock came to you and were like, hey, we want to adopt Bitcoin, how would you recommend that they do it? Should they start slow and just deploy some of their cash into Bitcoin, or should they just go on a full Bitcoin standard immediately and issue fixed income instruments and buy Bitcoin as fast as possible?
If you're optimizing for economic results and you had a charismatic CEO, the CEO would say, we've embraced Bitcoin, we're switching to the Bitcoin standard. You would convert all of your discretionary cash to Bitcoin. You would cancel your dividend and make it a Bitcoin. You would cancel your buyback and make it a Bitcoin buy, right? You would basically do everything that strategy has done. Then you would issue debt to buy Bitcoin. That's if you just wanted to make the money. And that assumes, like, who could do that? Well, Mark Zuckerberg could do that, right? If you have a very charismatic, powerful founder that has a controlling interest and isn't insecure about their position, they could do that. If they just wanted to make money. If you wanted to make $1 trillion at Facebook, that's what you would do, or so at Meta. If you're more of an employee CEO and you don't have that much control, you would creep into it, you know, we're going to take 5% of our assets and buy Bitcoin, test the markets, then you would increase it. And you would do all of this progressively over 3 to 5 years, building shareholder support and accommodating them, right? You wouldn't make as much money, but you'd still be better off.
Yeah.
And then you would first test the investors. If they're enthusiastic, you would increase your allocation from 5% to 50%. Then you would, instead of raising the dividend, you would implement a Bitcoin buy. Right. And then instead of raising the buyback, you would implement a Bitcoin, you know, so so it would replace every bank, every Mag 7 stock announced an increase in a dividend, an increase in the buyback. You would replace the growth in those things with the Bitcoin program. That's a very incrementalist approach. You'd still make a lot of money. Not trillions. You wouldn't make $2, $3, $4, $5 trillion, but you would make billions or tens of billions, maybe hundreds of billions in time.
Yeah.
So that's what I would say. It all depends on who you're talking to. And, you know, the great irony with Bitcoin is the question is, who wants the money, right? It's infinite money if you want the money, right? It's like, and some people want the money more than others. The irony is the best run companies in the world don't really want the money, right? They don't need it. The question is, do you want the money more than you want to be, if you're willing to risk the ridicule or risk the volatility, you can have the money. But most successful money managers, most successful corporations, they don't want the money as much as they want stability and they want to avoid the risk. And so you have to find that rare combination. I don't think you're going to find it with, you know, you're not going to find it with Berkshire Hathaway or the Mag 7 or the mega banks, because they're operating, you know, as a pillar of stability. They've got a good thing. Arguably, the Mag 7 are the 7 greatest companies in the world. So if you have the 7 most powerful companies in the world out of 400 million companies, they're the 7 out of 400 million that least need Bitcoin. I mean, try the bottom 100 million companies. Pick every company in the S&P 500 below the rank of the first 10 that has no hope or chance of competing with the Mag 7. They have more upside, less downside. But it's always hard to predict who will grab an innovation and run with it. And sometimes it comes out of left field from someone that you didn't expect it from.